Hi everyone, Jarrett Harris here, Director of Research at Iron Advisor Insights. One of the defining themes of the past year has been the growing gap between new and used asset prices. Now, the magnitude of that disconnect has varied by industry, but whether it be farm equipment, trucks, or construction equipment, this has been a prevailing difficulty. As we head into 2026, there is an expectation that this gap narrows. The debate centers around how. Do new prices stay steady while used increase? Do both increase just at different rates? Or is it possible that new prices actually trend lower? Well, in the spirit of year-end pontification, I'm going to share what I expect in farm, truck, and construction equipment prices based on recent Iron Advisor Insights work. All right. Where do we see new and used farm equipment prices heading? If you follow our work, you know that just a few months ago, our team picked up a little bit of optimism from farm equipment executives around used market stabilization and potential policy relief. But as 2025 draws to a close, that optimism has faded. There's very little pent-up demand, as many farm operators have taken advantage of used equipment bargains and OEM incentives over the past year. There's still an abundance of attractive used iron in the market, so farm operators have plenty of alternatives to new equipment purchases. And policy developments have not moved the needle. Optimism following the US-China soybean deal was muted, and the scope of the government relief program is not inspiring much enthusiasm. So, my best guess, as of today, I think new prices will be flat at best in 2026, while used prices increase, though not until the second half of the year. All right, where do we see new and used truck prices heading? Well, historically speaking, there are three market levers that strongly influence truck purchases: freight rates, interest rates, and fuel prices. But this year, we've seen three additional issues emerge, all in the policy world: stricter CDL requirements, tariffs, and emissions regulation. Now, easing interest rates and lower fuel prices should contribute to the financial health of fleets and owner-operators. Tariffs, both on materials and finished goods, give OEMs clear justification to raise prices on new assets. And the firmed-up 2027 timeline regarding NOx emissions should generate some sense of urgency. Buy now before prices increase further. Now, the wild card remains freight rates and the impact of stricter CDL requirements. Recent commentary from the freight world points to modest lift in rates, but this isn't a function of increasing demand so much as reduced capacity due to both operator failures and stricter CDL requirements. And there's a growing concern that fleets may find themselves with more trucks than drivers. Now, still, the balance of factors, I think, is slightly positive for 2026. So at the end of the day, I believe new and used prices both see increases. All right, finally, where do we see new and used construction equipment prices heading? This may be the hardest market to predict. As we ended the third quarter, there was a clear consensus regarding new equipment prices. OEMs were done eating tariff costs and price increases were on the way. But as we got into the fourth quarter, some of that materialized, but we simply didn't see the decisive across-the-board increases executives had anticipated, as many leading OEMs continue to prioritize share gains. Now, some dealers said OEMs are reconfiguring list prices, making an apples-to-apples comparison difficult. Others reported minimal order activity, expecting recent increases to be rolled back. Now, what makes the construction market unique is the presence of an established and growing rental market. But this too is an area of tension. Acquisition cost increases have outpaced rental increases for some time, and this has spurred many fleet operators, even some of the largest, to mix more used inventory into their fleets. So, I would say that I have conviction around used price increases in the construction world in 2026, but new, that's a question. The answer depends on what OEMs choose to prioritize, margins or market share. All right, how does your scorecard compare? Agree? Disagree? Please let us know your thoughts either way. And above all, as 2026 gets underway, stay sharp.